Jason's one of my favorites, and we've got some great guys here as well, and gals. The investment pros, Matt, Hillary, and Jim, and Mrs. Hughes, Scotty, she'll be on later. Plus, we've got Kyle Harrington. He's the founder of Harrington. I want to give it to Jim. The Fed cannot hand off the economy, if you will, or the stock market to a flaccid or an inconsistent economy. So we do need to see stronger wage growth at some point.
I think you're right. I think we are going to see a good number, not as good. So I'm agreeing with the panel, so I guess we're all wrong. You're going to see a little wage growth. You got the ECB, which we talked about at the beginning of the week, taking some actions, and we had some U.S. bank stress tests, which actually many of the U.S. banks did very well. So again, I do think there's some momentum here. So actually, I think the market's going to push higher. The Fed's going to, if they're doing anything later in the year, it'll be just small.
Minute, very minute. All right, on that note, guys, let me blow the whistle. I call it a wageless recovery.
Yes,
it's more so than a jobless recovery.
You saw the Walmart announcement. You saw Governor Cuomo talking about pushing New York higher. Wages are going to go up. It's not going to be monstrously, but they are going up. And you sometimes see companies getting a negative reaction to that because that's one of their great inputs. A lot of the hospitality businesses, they're going to get hit by that. But again, I do think we're going to see that wage action.
For the economy, it's good, though. That's good.
For the economy, it's good.
But you're a professional money guy, and you're going to, even though you have skepticism, you're going to stay long until it's time to get out. You're not going to try to predict the top.
I think I like someone, Paul Schatz said in the show earlier, the fourth quarter. But you know what? I think we're still early in the fourth quarter. There's more to go.
I think we may need a baseball analogy so we can add innings.
There we go.
All right, guys. With anyone here, when everyone's talked, we talked about this pullback here, what we're doing to brace for it. Let's say it does come, though. How do you handle it, Jim? We start to finally get that 15% pullback, because last October, I think every day we were coming here thinking like, uh-oh.
No, I thought it was a great chart you put up of how many days we've had without any kind of pullback. What is the catalyst going to be for this pullback? And obviously, we can make predictions. We don't know for certain. We do know that rates are going to go up. And I think that could be, for example, people could overreact to the rates, even though I think the Fed's only going to move a little bit. The banks are well capitalized right now. What started the financial crisis? A housing crisis that on great leverage that created tremendous contagion. I don't see that much leverage in the system right now. So to your point, I think we can go further on a pullback. I would see it as a buying opportunity.
Does anyone think we should be afraid of private company valuations? That's one of the things Mark Cuban talked about, and a lot of people are talking about Snapchat shouldn't be worth this and Uber shouldn't be worth that. I'm not too concerned if a bunch of VCs lose money or people crowdfunding lose money.
I totally agree with you, Charles. I think that we're in so much of a better place than we were when we had the internet bubble, because those companies were public and everybody was just loading into them, and people were spending their life savings to invest in women.com. That was when I invested.
But I think what you're commenting is that the general public was losing money because they were public companies. Now we're saying rich people
that's right.
We don't care that they're going to lose money. I think what I heard Mark Cuban saying is that, and we've been talking about this, the private market has gotten much more mature. There is a lot of money. A lot of companies that go public are doing so after they've had many rounds of financing. That's what he was commenting on.
I've done a couple of playbooks on that, and I think it's a disservice to the general public.
Yes.
But I think the public is getting hip. They didn't go for it with Candy Crush. They didn't really go for it with Alibaba. They're getting pretty hip about, hey, you guys have bought it at $200 million, and you're selling it to me at $40 billion. I don't think so. Hey, the lightning round.
I was going to say, I think this is a story where you're better off being a customer than you are being a shareholder. And to a certain extent, you want to get in the space. Chipotle's trading at a much cheaper level on a PE basis, and I think they have a more expandable franchise right now. Panera's a little expensive to expand on. Tougher concept to grow on a franchise level. I like Chipotle.
I'm really licking my chops to buy some Chipotle, too. No pun intended. Well, maybe a little pun. As soon as they raise those steak prices, that stock is going through the roof. Hillary?
Technically strong in semiconductors, and as you said, Charles, a survivor, and you get a dividend yield.
What's the yield? I don't even know.
3.2.
Okay.
I thought it was even a little higher. And they have an excellent capital reinvestment program. In addition to the dividend, they're buying back stocks. So I'll say if you think it's a little pricey, don't worry. There is a backstop. There is some support here in their own buyback program.
Did you guys see Apple bought back $54 billion of its own stock last year? $54 billion? Oh, my God. They could have saved the world with that. But what they're also saying, though, Jim, is that forgetting about this stuff that makes the news, just because of the faulty infrastructure and how these airports are crumbling like all other infrastructure, it's costing the economy billions of dollars. And at some point, we've got to fix it. Who's going to foot the bill?
Look, we're a country, I think, that is struggling with infrastructure projects. And here in New York, I think we have three of the weaker airports. The fact is, the delays and the lack of infrastructure today is costing money. To fix it, it's going to cost money. Do you want to pay now or do you want to pay later? The fact is, I would rather charge more. I'd rather be taxing on the travel more in order to start putting that money towards
Why do you
fixing our
privatize it?
infrastructure.
Why can't you privatize the airports, privatize the toll roads? We've seen that done in Chicago. It works. There's companies out there that are willing to do it. I think that's a route of this way.
I think our airports are embarrassed.
By the way, Delta was downgraded yesterday. Talk about some firm with pretty good timing. You guys, anyone still like the airlines?
I still love the airlines. Yep.
Virgin America, VA, I'm in it, and I think that's the one that's going to go
All
up.
right, real
That's
quick, let's
JetBlue.
handicap tomorrow. What are you looking for?
190,000.
Really? Weak. But you're going to put an asterisk, blame it on the weather. What do you
That's
think?
right.
240.
240.
230 right in line, but it's going to be better than expected because people are thinking about weather being bad.
What do you think,
I'm
Scotty?
going to do 235. I'm going to go between the two of you.
All right, I'm going to say that 270.
Oh, that's optimistic.
And I'm going to say Wall Street's going to like good news. We'll see. It wants to go up. The market definitely wants to go up. Hey, it was a fantastic show. Thanks a lot, guys. And at home,